Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
All right, everyone. Thank you for joining us on another session of All Things Wildfire. Today I have a guest that deals with insurance claims, like what happens after the fire.
Good morning. Nice to see you, OP. My name is Steve Severaid.
So, Steve, thanks for joining me. I think, you and I were talking a few minutes before about some of the important things that people need to understand about wildfire damage, specifically wildfire claims, that claims process. And so a lot of our listeners have been informed on what they can do to prevent wildfire damage to their properties, commercial buildings, residences, and also some of the things they can do to help slow down the impacts of wildfire, especially if they have hillsides. But we're talking more and more now about when this happens, okay? Because most of our listeners, and I don't wish this on everyone, or anyone, but we're going to be evacuated at least, okay? And so if we're evacuated, we are going to have this unknown of what's going on with our properties. But when we come back and face the reality, whether it's catastrophic or whether it's just minimal damage to our properties, you have the expertise and the experience of years and years of dealing with these types of claims. And so what would you say, like what is most memorable for you with regards to the most recent wildfires that we've had in California? What stands out for you in significance with regards to the damages?
Well, I think as we talked a little bit, OP, one of the big differences is the lack of availability of insurance, especially in brush fire areas in California. So more and more people have had to turn to California Fair Plan as the kind of the last resort or one of only a few opportunities to be able to obtain and maintain insurance. And so that changes the claims landscape a bit when you're dealing with Fair Plan on a large volume. California Fair Plan was put together never to be an insurance company of choice, but to be a stopgap measure for people who couldn't currently be insured under primary markets. And what it has become in the last couple of years, it's become like a primary insurance. And that was never the intention of the guarantee fund that was put together and established. So their claims handling is more difficult, and they're overloaded more than they ever have been because of the volume of claims, because so many people have to turn to that insurance company of last resort. So that makes claim handling more difficult and more bottlenecked.
Got it. Now, and it makes sense. Some of the other experts I've had on the show have said exactly that. It was not made for this. It's being overly used, and now that creates an even scarier moment of a possible situation that could impact the Fair Plan in a very negative way if there is an influx of disasters or a catastrophic event that triggers the Fair Plan to execute. But I was sharing earlier, I had a friend. We were over in Bell Canyon taking care of customers after the evacuation was lifted, and we're deodorizing homes, we're cleaning homes, we're washing off soot off of the roofs and the driveways and the stucco exteriors and cleaning furniture and all that. And a friend of mine says, "Hey, OP, I'm down the street. Can you help me?" I said, "No problem." We set up equipment to start deodorizing the interior. We start getting the clothes out to get those shipped over to a dry cleaner to deodorize the clothing. And the next day she says, okay, I found out who my carrier is. I have the Fair Plan. And I thought, oh, shoot. Okay. And having been in this, in this world of disaster restoration, I realized the Fair Plan has a lot of limitations. Let's make a call. We made the call, and the Fair Plan says, hey, look, we are not paying for anything inside the home. Any deodorization you're doing, any clothing that you've got going on, zero. all we're paying for is any physical fire damage to the property. And there was a little bit of damage to the fascia board, and then some, discoloration on the stucco. So they paid for painting of stucco on 2 walls and then replacement and painting of the fascia board. And I thought, wow, how tragic for the homeowner who her neighbors and her friends are having the entire home turned upside down, cleaned, the ducts cleaned, everything deodorized. Her children had, allergies and stuff too, but she had to hire people for weeks to try and get this odor out. I actually left my equipment there for her and just said, look, let me help you through the process. But most people, if they only have the FAIR plan, they're going to be stuck with a major cost, number one. Number two, major inconvenience. Number three, as far as, probably in the inconvenience and in the cost, if they can't be in their home, the other people are getting paid to be in a hotel, and they're getting paid for their food and per diem and all that stuff. But this homeowner here that has no insurance and no coverage, she's having to stay in a hotel out of her own expense. She can't get in. There's no power. There's nothing they can do. And so they have to pay for all these expenses. That's kind of a shocker to people when the time happens. But what advice could you give the listeners, right? Because you've dealt with this, you've seen similar stories, probably worse. But what can people do to prepare themselves not to be so vulnerable?
Well, first of all, those things typically are covered under California FAIR Plan's policy. One of the difficulties is that when you're dealing with an inexperienced adjuster who's representing California FAIR Plan, and they don't understand the policy, and they're told something from somebody, and then they say it like it's gospel, and then a lot of homeowners take that to mean that's it. That's the way it is.
Hold on, you're saying that the deodorization, all that should have been covered?
Listen, I don't know the specifics of that situation, but I can tell you with California FAIR Plan, that's a normal thing that we get paid for. All the things you mentioned are normal things we get paid for.
Wow.
So, that's bad claims handling, bad advice. People look to the insurance adjusters like I hear this a lot over the years. I've been doing this about 34 years. And I hear a lot of homeowners say, well, my adjuster said. Well, he's not your adjuster. He works for the insurance company. He has no fiduciary duty to you to get it right or say the most accurate statement. Not he or she is probably trying to do something wrong, but a lot of times they just don't know. They're ignorant. And when people look to them as an authority figure, then they end up getting sometimes really bad advice. And again, I don't know the circumstances of your friend, but I can say, generally speaking, those items are typically covered under FAIR Plan's policy. What people don't understand, OP, is that FAIR Plan, in that circumstance with a wildfire, those things should have been covered. But there's all kinds of things that can happen to a homeowner that wouldn't be covered at all under FAIR Plan, because FAIR Plan is very specific language that really responds to fire and lightning explosion, but none of the other things that can happen. If a tree falls on your roof and crushes your roof, that might not be covered under FAIR Plan. If you have a broken plumbing line and it floods the entire house, you would have no coverage under FAIR Plan. So I think a bigger thing for people to recognize is that if they buy a California FAIR Plan, that doesn't protect them. It protects them against a certain few named things. Okay. But in order to be protected for all these other things that could happen that are more likely, typically, right? They have to buy another insurance policy. They have to buy 2 policies, basically.
Got it.
They have to buy a FAIR Plan, and then what we call in the industry a wraparound policy, another policy from Allstate or Farmers or whoever that covers everything but the things that California FAIR Plan covers. And so that, I think, is an important thing people need to recognize, is even if they have to go to the insurance of last resort, they still have to go and buy another policy. And that policy doesn't give them double protection, which is another misnomer that people think, well, I've got FAIR Plan and I also have Farmers, so I'm double covered. No, you're not double covered. You're covered for different things. So, and a lot of people don't understand that either, Opie. So,
Wow, and that's good. Look, this is good information for our listeners because, you know, if they have the FAIR plan, which I had the FAIR plan a couple of years ago, that's the only coverage I can get is when I was buying the property. And then I had another company do the wraparound, to use that term, which was they would cover their water damage, they would cover potential other claims. And I just assumed, I was assuming that, okay, cool, my agent, my broker set this up, this is the right thing to do, cool. The problem then becomes, in my friend's situation, okay, if she wasn't guided to get a wraparound insurance and she was only told to get the FAIR plan, that's a sad situation, you know, that she wasn't advised, because I can't guarantee, but I think most people will understand, oh, okay, wow, that isn't all that I have to pay. I have to pay for another carrier. And then once it's explained, I think most people would say, we have to do it, right? Because these things could happen. But to expect that you're covered and not have coverage, very, very painful. And we were speaking earlier about an example you had about a commercial building. Can you share that really quick, just so we can put some perspective around that?
So I think it was last winter. I got all the winters mixed up. As I get older, the winters merge together for me. But I think it was last winter. There was a lot of snow up in Lake Tahoe, Northern California, and there was a collapse roof on a commercial building, pretty substantial. And we got involved and found out that he had California FAIR plan, had originally had a more traditional insurance company, wildfire area, even though he didn't have a wildfire. They dropped him. He went to California FAIR plan, which was all he could do at the time. And he had a $3 million California FAIR plan commercial policy, and quickly learned that California FAIR plan doesn't cover collapse. And his broker did not advise him, hey, this covers you if another wildfire comes through, or if the building burns down. It doesn't cover you for a lot of other things that could happen. So California FAIR plan denied the claim, and it was a $3 million problem. And he had $3 million of insurance, didn't cover collapse. And his broker didn't advise him. He thought he had fulfilled his requirements. And so he thought he had $3 million worth of coverage, and they went to use it. He had no coverage at all. And so you can imagine, and I think I mentioned to you, if there's brokers that listen to your podcast, that's a cautionary tale that they're now, obviously their broker and the policyholder have, let's just say, I'll call it a contentious relationship right now.
Absolutely.
As a result of, hey, why didn't you advise me that I'm not fully covered, and you left me naked out here, and now I have a $3 million problem. So, you know, it's not a position that you want to be in as an owner, whether you're a homeowner or a commercial owner, and it's not a position you want to be in if you're their broker either.
Right. No, I think as much as it's a cautionary tale for a broker or an agent, it's also an opportunity for them. Because if I'm hearing this and I, have a staff member review our policies and say, hey, let me know everyone who's got the FAIR plan and no wraparound, and let's go after and start making some phone calls, right? And advise them, right?
You'd be doing well for your business, and at the same time doing a real service for the clients.
Absolutely.
So it's a win-win.
Absolutely. And I think what's kind of a bummer is right now in this hard market, you've got the brokers are challenged with the high premiums, the limited coverage, the reduced coverage, the high deductibles. And some brokers are afraid to talk to the customer, right? Like they're just going to throw a shoe at me. But it's the reality. Like this is what we're dealing with, right? So why not? I mean, they're already throwing shoes at you. Give them more news that says, hey, look, you're not fully covered. Okay, let's just talk about this. Here's your options. But at least you're providing the option, and let the consumer make the decision on that.
Better to get thrown a shoe right now than you have a car thrown at you later.
Oh,
So,
that's a good point.
I think also you're going to see. This is my opinion of being in the market, going to a lot of lectures and conventions and talking to a lot of people. I think you are going to see an opening in the California market again. People are going to come back into the market. The Department of Insurance has started to negotiate rates and things with the carriers who have pulled out, and it's an ebb and flow. We've seen this before. A lot of it is tactics and negotiating by the carriers to get what they want to come back into the market, and they're gonna. I believe that this will loosen up and it will get better. It's not going to help if we have another major wildfire this year or early next year, but I think I don't think this is forever. I think you're going to see a shift again, and you're going to see people entering the marketplace. And California Fair Plan, the insurance department understands that it was never meant to be what it is currently being, and so they want to work to solve this problem too.
Got it. Okay, cool. Thanks for sharing that. Now let's talk. You mentioned earlier that homeowners, when they have a claim, they're assigned an adjuster by their carrier, and you had said that you keep hearing that people say my adjuster said, and they're looked at as an authority figure. And in all the years that you've been adjusting claims, what are you seeing in the adjusters? Are they well seasoned? Are they experienced? Are they knowledgeable? What are you finding out there?
Less and less. Many years ago, they were real professionals. A lot of them were real professionals, and they had knowledge, and they had training, and they had experience, and they had authority too. So you could sit down and negotiate something with them, and they had the authority to make a decision up to a certain amount, and those amounts, were 100,000 or hundreds of thousands of dollars before they had to go to their supervisor. And now the authority has gone way down. The talent pool has gone way down. The education has gone way down. So what you have is frankly, a lot of inept adjusters, people who, they were doing auto claims yesterday. Now they're large loss guys, and they don't have the depth of experience.
Do not tell me that.
Well, it's true. And they don't have the authority, which I guess from the insurance company standpoint is probably smart. You don't want to give somebody a whole lot of authority if you know that they don't have any knowledge.
Right.
So yeah, that's what we see more and more these days.
Wow. And look, that becomes challenging when there's an actual claim, because for the brokers and agents that sell the policies, like, they're doing their part and they did their job. Now it's time for the back end of the carrier to do their job, which is perform when there's a claim. And man, it's a bummer, because I'm seeing some of that too. I remember the days when you had a veteran of 20, 30 years adjusting a claim. It wasn't as difficult. But to your point, you're right. When you said the authority limit, it's so true. There's some people that are looking at, they're qualified as a large loss adjuster, but their authority is $20,000.
Right.
And then it's like, why are we even here? Like, what's happening? And so, but I think what I'm seeing, and I'd like to know what your thoughts are on the claim side. I'm seeing that these delays are causing major problems, not only in that the homeowner or the business owner doesn't know what's going on because the information is not coming in fast enough from the assigned adjuster, but the additional living expenses or the loss of use continues to run up a bill, when common sense says, hey, if we just can negotiate and figure this thing out here on this loss, we can get rid of 2 months of you paying X amount of dollars per month for that homeowner to be out of their home. And I feel like the math is not being done fast enough, or they just don't care. I mean, what do you run into, and how do you work through those challenges?
OP, I think this is a great example of being a business owner or being a business leader and thinking like a businessman or a businesswoman versus being an insurance company. And the minute you try to think like a business person and you're dealing with an insurance company, you're not going to connect, because They will spend $1,000 trying to save 100, and they always have.
Wow. That's I thought you were gonna give me some other insight versus that, but that's a bummer, man. Because like the reality is, then you wonder why the premiums continue to go up too. Like the spending goes, it's incredible.
But you're right. There's a ticking clock there, and the longer it takes to adjust the claim, and then they'll say, "Well, why didn't you start? We gave you an advance payment." Well, we didn't start because we had $800,000 discrepancy. And how do you sign a contract with a general contractor if you don't know if you're going to have the money to pay them? So now you're in this impossible place between needing to get started because you have a ticking clock and not having any promises at all that you're going to get the money that you're going to need to pay that contractor.
Steve, look, man, this actually happened to me. We had a claim, it's probably $500,000, and the carrier agreed, and we're on a Zoom call because it's been going on for months. We're trying to get this thing just to the next step of us actually swinging the hammer. Out of the $500,000, $350,000 was approved, and the carrier said, "Hey, you have my approval. Go ahead and proceed." And I'm like, "Okay, hold on a second. That's not how it works." Okay, right. Like I need the homeowner to sign a contract for $500,000. Who's going to pay the difference? And when because the homeowner was on this call, it was kind of a high-end client, and the homeowner says, "Look, Mr. Carrier, I want a commitment from you on how much more time you need to get me to the place where there's a full, complete settlement. I don't want a halfway get started. I need a complete settlement because I want to know how much out of pocket I'm going to be, if anything." And so this is where the rub is, just because they give you an approval to proceed with this amount that's, hey, this amount's approved, go ahead and proceed. That doesn't make sense. It does not work. A contractor that is a legitimate contractor will not start. You might get some people that will start just because they think the carrier's going to pay, and then they end up in a world of hurt because
they tell you to get started so they can get the clock ticking, so that later when you don't get started, they'll look back and say, "Well, we don't think we owe you this much time for being out of the house because you could have got started 3 months earlier or 4 months earlier. And so, that's on you that you didn't get started." So you have to document it very well so that you don't have them playing Monday morning quarterback later saying, "Well, you could have started earlier."
So you're saying the carriers will hold the homeowner accountable for that?
They can, and they have.
Can you give us some good news, Steve? Can you give us some so what tips can you give the listeners before they have a claim, in preparation for a claim? What should they be looking out for? Because at some point, our listeners are going to experience a claim. What would you?
Hopefully they won't, but odds are somebody will. Yeah. First and foremost, read your insurance policy. Try to understand it. Don't wait until after a major event to try to figure out what you bought. A lot of times people buy insurance because it's required of their lender. And I'll tell you, OP, there are many times when people don't have a lender and they just don't buy insurance because nobody's telling them they have to. Seen it many times. If you don't have a lender, still buy insurance because you got to protect that asset. But most people have a mortgage, so they're forced to buy this insurance policy. And a lot of people look at it as just a requirement of their loan. But it's a lot more than a requirement of loan. As you know, being in the industry, and as I know, it's a really, really important financial tool to lay off risk and not have the burden of trying to figure it out on your own. And a lot of people don't have the kind of ability to do it out of pocket, even if they wanted to. So that document's really important. So pay attention to it and don't just shop price. Buying it from Costco doesn't necessarily make it good because it's cheaper in this example, right? So read your policy, see what you have. If you have California Fair Plan, make sure you have a wraparound that covers you for other things besides fire. And then the other thing I recommend is that everybody go through their home with their phone or whatever, and just do a 10 minute walk around the house, open drawers, open the cabinets of the kitchen, narrate what you have, open the jewelry box, go in the closets, and make sure that that's saved to the cloud somewhere, or that if you want to do a hard copy type thing, that you put it somewhere else besides your home. And that goes a long way. They say a picture's worth 1,000 words, a video's worth more. So, and pictures are great, but a video's even better. And then you have that, and hopefully you never need it. And every year or two, just replace it because things change in your home. What that does is it gives people like me or people from the insurance company ability to see not only what you're looking at, but the fit and finish behind you. So you can see the detail of the crown molding that maybe you wouldn't have thought to tell anybody, but I'm watching the video. I'm saying, yeah, I like your Aunt Lucy's chair that you got inherited, but I really like to see this crown molding or this wainscoting or whatever it is. So that helps a lot if you have a total loss situation, especially to help recreate what you had. So that's an easy thing to do. Most people don't do it, but it doesn't take much time or effort and it costs nothing. And that's something I would recommend. Now, that's pre-event. Post-event, first of all, I would be remiss if I didn't say go out and hire a qualified public adjuster. It doesn't necessarily need to be us, but whoever you hire, make sure they're a member of NAPIA, the National Association of Public Insurance Adjusters, and get your own advocate so that you're on a level playing field with the insurance company and their quote unquote experts, right? So, and if you choose not to do that, then you need to step into the shoes and realize that this is a job and a profession that you're going to need to learn. And so that means documenting everything. That means not just listening to what they say, but double checking the facts. It means being proactive with them, and roll up your sleeves and turn this into the job it is, because it takes us hundreds and hundreds and hundreds of man hours to prepare and present these claims. And if there was a shortcut, OP, believe me, I'd be wanting to find it, because it would be a lot less expensive for us to handle claims if we could do it in a faster way. But we've learned over the years that the only way to do it right is to do it right.
Gotcha. So thank you for sharing that, Steve. So when someone gets into a car accident, you see these attorneys that run to the hospital and go, "Hey, let me sign you up. I'm gonna take it to the insurance company." And I think sometimes people view public adjusters like your firm as potentially the greaseball style people. But I've been around long enough where I've seen I've seen those types, by the way, right? Like they're out there. I've seen those. But when you talk about, hey, when you have a claim, get yourself an advocate. And I think that rings true for a lot of people, especially people that have a very busy life, a professional, a business person, a CEO, people in industries that take so much of their time that if they don't have an advocate, they're going to trust the carrier. And I've been in this industry for 26 plus years. All I've ever known is trust the carrier. This is what they do, etc. So what would you say to those people that say to you, "Hey, Steve, look, I'm just going to trust my carrier. And I don't need an advocate, but thank you very much. You know, whatever they say, I'm sure that's the truth and that's what they're going to pay. So I'm going to keep it as such." What would you say to people like that?
Well, I'm glad you brought it up, and I'm glad you brought up the personal injury attorney comparison. I am, because it's very different. First of all, with the insurance policy we're responding to is somebody's insurance policy. It's not going after somebody else. And there are certain rights, duties, and obligations you have in your insurance contract with your insurance company. And that's not the same when you're doing a personal injury thing, and attorneys are going out trying to argue how valuable your arm would have been that you lost or whatever they do. And it becomes more of a nebulous amount of money that isn't quantifiable necessarily. But what we literally count furniture and count pencils and paper clips. It's quantifiable. Got it. Right? And you understand that being a restoration. And so when people hire us as an advocate, we're not out to rob the insurance company or to get anything that our client, the policyholder, is not legitimately entitled to. We're not trying to create money where there isn't value. All right. So that's a big difference, I think, in my mind, in my world, between what attorneys do and what we do. the reason people should hire an advocate is because we understand the process better. We understand the policies better. We take the time, we're paid to take the time and attention to detail. We have the experts under our roof and estimating and quantifying inventory and all the other things that come to play with this. And a homeowner, whether they're a savvy homeowner or whether they're not a savvy homeowner, they've never been through this before, most likely, and hopefully will never be through it again. So they're going to learn a lot, but hopefully that's a lesson they'll never need again, right? And so, and also, not all insurance adjusters from the insurance companies are, in fact, many of them are very good people. We hire some of them to come to work for us.
Okay.
Yeah, it's true. We pull from the educated, the ones we see on the other side that we know are doing good work and really care about the policyholders. Those are people that are in our hiring pool. So I'm not here to say bad things necessarily about insurance companies, the industry. It's an incredibly valuable industry. It's super important. The world as we know it wouldn't circle around if we didn't have insurance. Imagine trying to buy a home and get a mortgage if insurance didn't exist. So this is really important stuff for our economy. And our job is to work with insurance companies and with the people they bring out to come up to an understanding of what is fair, what is reasonable, and nothing more and nothing less. And so it's different, I think, than attorneys. But a lot of times insurance adjusters don't even read or understand their own policies. I'll give you a quick example, Opie. I know we don't have all day for this podcast, but I remember specifically there was a time, and sometimes you just remember certain things. And so there was a fire. We put an inventory together. We sent it to the insurance company. It wasn't a total loss. It wasn't a wildfire. There was a $22,000 diamond pendant that was a gift from the insured's mother that she lost in the fire. Very sentimental to her. She hoped to recreate it and get it again. And the insurance company wrote back in a part of the letter, they apologized that there was only, I think it was $1,500 limit for jewelry. And that although they recognized the value of the item, unfortunately, there's a sublimit in your policy. So we're giving you the I think it was $1,500, and we're really sorry we couldn't do more. Okay, so we go to the insurance policy and we quote the language that yes, there is a sublimit for jewelry of $1,500 for the peril of theft. Ooh, this wasn't a theft. Ooh, this was a fire. Ooh. Therefore, that unlocks coverage all the way up to the contents limits.
Wow.
That homeowner never would have figured out the distinction and known to go back. And they paid it. They had to pay it. But that's the kind of stuff we do. So we didn't get anything they weren't entitled to, but we know what they should be entitled to.
Wow. What a great example. And look, I'm going to add to this. I started the company in 2010 with my little brother, Victor, who had been in the military, in the Navy for 11 years. And he and I were working in another restoration company. We decided, let's start our own company. Great. Well, 2 years in, he suddenly passed away from a severe case of pancreatitis.
Sorry about that.
Thank you. The interesting thing is that we had bought insurance that's a year before for ourselves and for the company, Key Man Insurance, right? If someone goes down, then the company gets some money. So I got a hold of the insurance company and said, hey, look, my agent, this is what happened. And he says this to me, OP, I'm so sorry to hear about your brother. Look, we process things really fast here. You'll have a check within 10 days. And I'm like, brother, I trust you. Do your thing. 8 months later, Steve, there is no money. And I'm dealing with the adjuster because I'm thinking, hey, this is what you do, right? This I deal with claims. This is what you do. Well, it's meeting after meeting after meeting after paperwork and paperwork and paperwork. And now the company's really suffering because I can't hire more people because we're bleeding cash. We got some problems. I hire one firm. They interviewed me. They said, we want to take on your case. I said, fine, I need help, please. They write one letter, Steve, one letter. Within a week, everything's paid. And I was so insulted by that. I thought, are you kidding me? But what that showed me was kind of circling back to what you're saying. The level of expertise of people that do this on a daily basis really do understand the intricacies of what a layman does not, right? You're in policies all the time. You're having to identify and interpret them all the time, every day. I jump in and I'm like speed reading through this thing, and I think, okay, cool, I got it. No, you don't. So I think there are times when an advocate is absolutely critical, and it really comes down to the individual. Like, what's your tolerance, and what's your expertise, and what are you willing to do? And oftentimes, you kind of give the insurance company a chance. And look, to all the carriers listening, you don't have to worry if your people are trained to deliver service and to be experts. Nothing to worry about. But if you know that you're in the boat of, hey, I've got a bunch of young people, there are a bunch of cowboys and Indians, we're doing what we can, we're plugging the holes wherever we can, and the service is not there, then unfortunately, you're probably going to see a lot more types of claims where the homeowners are more and more unhappy, and they complain more, and they have issues. But for those of you that don't have that problem, you got nothing to worry about. And it's really just delivering on the promises that the homeowner believes that the carrier made to them. And when it doesn't come true, or it doesn't happen as fast, the trust factor begins to dissolve. And then it gets harder and harder to continue to trust. And then after weeks or months, you're like, okay, I'm throwing my hands up. I don't know what to do anymore, right? And I'm seeing more and more of that happen, unfortunately. And again, not bashing any one carrier. It's just a matter of fact of what I'm seeing out there, and other of my friends are seeing out there too, in addition to what you're seeing, Steve.
Well, the reality for the insurance carriers, and certainly any of them listening, the reality is, if they want to pay their policyholder fairly, and we want to get the policyholder paid fairly, shouldn't matter that there's a qualified public adjuster. Now, there's good and bad in every industry. I'll give you that. There's good and bad doctors. There's good and bad lawyers. There's good and bad restoration specialists. But if somebody hires a qualified public adjuster who is a professional in their industry, it shouldn't matter to the insurance company that their policyholder has that, because all we're going to do is make their job easier. We know what they need, and a lot of times homeowners can be part of the problem. They are unrealistic. They don't understand what's reasonable. They don't know where the line between reasonable and ridiculous ends. So sometimes we have to adjust our clients, and it's easier for us to do it because they know that, hey, these people are working for me. So if they're telling me this, then, I can accept that it must be true. Right. So we know exactly how the reports need to be written. We know exactly what their chain of command looks like and who they have to go to get approvals. We understand that process. And so when we're working with a qualified carrier, qualified adjusters, it's a good relationship. And we're able to speed things along because we know what they need and we know how to give it to them and what format to give it to them.
Got it. It's funny, and I'll close with this. When you say sometimes, people want you involved. I've had some, insurance managers, say, hey, the homeowner actually hired a public adjuster, and I'm so grateful because they're out of control. And someone can bring some sense.
I can't tell you how many times I've had insurance adjusters pull me to the side and thank me.
Yeah, because sometimes you get the opposite where people are just, they want the world, and makes no sense at all. Right. And you need someone to kind of keep people in the boundaries of the claims process. So, yeah. Steve, well, thank you very much. I know this has been enlightening for me and hopefully for the listeners to be able to understand that, being prepared is important. Absolutely. And like you said, read your policy. If you've got a weekend or you have staff or people that can do it for you. And then I really do like the video, taking the video of the home. And what kind of hit me was in the Malibu fires a few years ago, a client came to me and said, OP, my house is in rubble. I can't identify anything. And the insurance company is asking me to make a list of everything that I had. And, she was talking about how she has a notepad right next to her nightstand. And every night, 2, 3, 4 o'clock, 1 o'clock in the morning, she's having to get up and write something down because it comes to her mind. And how stressful is that? That, if you can't list everything, you're not going to get the value of what that was. And so to have a video, I think is smart. Have a video, keep it off site. In case you need it, you have something much better than having to rely on your memory of what is in every single room, every single drawer, every single closet. It's a losing battle if you leave it up to your memory. So that's a really good point. And I think, guys, if you have the challenge of having the FAIR plan, please make sure that you've got a wraparound insurance around that to make sure that you, your family, and are covered and taken care of, so you can go on with life. Right, the claim process is going to be painful in and of itself, but no need for additional pain if we can avoid it. So, Steve, thank you so very much. I appreciate your time, brother, and we'll be in touch.
All right, nice meeting you, OP. Thank you.
All right, take care.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.